Ladies and gentlemen, welcome to episode 10 of Investing with the Boys. It's called a Steve Nash episode. So, again, I asked the boys what happened this week. Because guess what? I don't think a lot of things happened, but logical. You made a lot of moves, or you made a lot of, you noticed a lot of trend changes that occurred this week. So I'm going to pass the ball to you, see what you noticed.
Yeah, I wouldn't say trend changes. If anything, it's been an extremely choppy market, especially with, we had the FOMC this week, which was an interesting sort of day. Actually, I've been pretty cautious for the last few months, but after we've had a 10% sell-off in the market, I'm very hypersensitive about what's going on, and I'm very cautious. Like if things really break down, I'm willing to go back to super defensive. But for the time being, I've gone basically full long again. Again, these things change day to day based on the price action because we're in choppy waters, and I'm not going to get ahead of myself. But what I can say, well, was pretty constructive, and I talked about it on our last pod, was like when you're looking for a bottom in the market, I don't know if I would say the bottom, but typically what happens is you get really bad news and then the market rips. So after the FOMC day, which was yesterday, I was just looking at the market after hours and I was like, okay, hold on. We finished up. We got rejected a little bit towards the end of the day, but the volume was way above average volume. And if I read that FOMC report, the press release that came out, I would have for sure thought we were about to break to new lows because the report was horrible. I mean,
Well, I think people were fixated on the QE that it looks like it's about to get launched from that balance sheet runoff that they indicated, right?
well, yeah, so I mean, they're not doing as much QT. I mean, they basically brought that back down to zero, which is really nice to see. The way I interpret it is kind of like, yeah, sure, I get that. There's a lot of mixed signals here, man. It's really tough to discern what's going on exactly and why market reacted the way it did. But what I can say is the market reacted, and that's important because when you look at the press release, obviously rate cut path stayed the same, 2 cuts expected for this year. But what you actually have is like 5 of the members in the dot plots are basically saying 0 cuts this year. They're obviously concerned still about inflation. So in the Fed forecast, inflation forecast went up, GDP growth went down. I mean, that is like sort of stagflationary, and that's like the worst case scenario. Growth is down and inflation is up. You're in a tough spot. You can't cut rates. You can't do anything. Rates are staying the same. I mean, to me, it just looked like a pretty bad report. But the market ripped, and then it ripped harder like after his press conference. So, I would say that Powell is really good at speaking and keeping the markets calm, which, I talked about in our last episode, which was like, we're going to bottom when something like a very bad report comes out, bad economic data, and then the market goes up. And when we bounce on really bad news, typically that's a good sign that there is a bottom there. I'm not saying the bottom because we're still definitely in a downtrend. Maybe we bounce from here, find the new resistance, head back lower. I'm not saying we can't, but it feels like, man, I feel like it was pretty bad news this week from the FOMC, and ultimately we didn't go any lower. Obviously I can get into specific names, but before we get there, Sam, what were your thoughts this week?
I mean, I don't want to say like uber bullish, but I've been consistently bullish in the long-term sense since 2023, specifically as the Fed started hinting around the time that, hey, we're going to start thinking about no longer hiking rates anymore. And the last rate hike we had was July 2023. And since then, the market's up. I wouldn't necessarily say liquidity has been easing. It's actually been somewhat tightening a little bit. But the dollar's pulled back certainly since the beginning of the year, which historically leaves a much tighter liquidity environment. But all that set aside, you can really just put all that noise behind you and just know that you do not fight the Fed. Okay, so maybe medium term might have more downside, maybe in short term more downside, maybe new bottom, whatever it is. But we got the affirmation yesterday that the Fed is still on track to cut rates. There was no mention of hiking rates. There was only mention of pausing. And like Shai said, they are continuing to ease or taper the amount of bonds they're letting roll off the balance sheet. They still did keep the mortgage-backed securities around 25 billion per month that they're going to be selling into the open market, but they're going to be letting about 5 billion of treasuries roll off the balance sheet. So it's not necessarily quantitative tightening. It's just letting them mature and not renewing them after that. So what does that mean? That means that the Fed is still in the cycle of cutting rates and loosening liquidity conditions. They're just on pause right now. So at the end of the day, this isn't like 2021 in terms of monetary policy because of the fact that 2021 we had liftoff. 2022, actually, early 2022, we had liftoff. And that was when the Fed started hiking rates. And they hiked rates very aggressively. So with all means, I mean, 2022 was a nasty market, but we were consistently having tighter liquidity conditions every single time the Fed went on the podium. And it was fast. And as soon as the market started catching wind, that liquidity conditions would loosen up. And also ChatGPT or AI is actually disinflationary for the environment because you're allowed to have greater input for less cost. So therefore, that's going to reduce the amount of overhead for a lot of companies and so on. At the end of the day, anything that makes it easier for people to spend money is overall bullish for the market for the long term. And we are in that cycle with the Fed. And for me, there's no reason to be long-term bearish to market. Short-term, medium-term, it's very hard to say, man. I mean, I thought we were going to have some follow-through today. We didn't. And, you know, it is what it is. We kind of got trapped in this huge range the entire day. Every single rip got sold off. And even Meta had like the nastiest chart today. Like they were up like 5% intraday and they just faded it throughout the entire day without a single bid in sight. So what does that tell me? Well, that tells me that at the moment right now, we're probably not going to make new all-time highs unless you said like that catalyst happens. But at the same time, it's like everyone's kind of waiting for that April 2nd when Trump's going to throw in the tariffs. Now, I don't know Trump like a BFF, like he's my homie. I know exactly what he's going to do all the time. Like, but you and I both know that something's going to happen for April 2nd. Whether that's good or bad, who knows? But it's not going to be like, hey guys, it's midnight, tariff time. Like, that's not going to happen, okay? He's very quiet this week, right? He had some like crypto summit thing today that he talked about. I don't know what it was. Clearly, you know, well, crypto might have net reaction, but that was around the time when the whole market faded. But it was like, this dude is suspiciously quiet, okay? And I feel like the market is waiting for something to happen, waiting for something to happen with Trump.
Can I jump in on that?
Yeah, go ahead, dude.
Like, I think, you know, his whole mandate was, let's get the 10-year down. We want to be able to unfreeze the housing market, all that stuff. We want to get rates down to get the economy moving again in the right direction. And when you have these tariff talks, essentially, it's going to raise prices. It's going to slow demand. And that's why you're seeing the GDP growth numbers and the forecasts go down, right? That's the reason why it was coming down with the Fed forecast, but also the Atlanta Fed forecast that we saw was like headed to recessionary territory. Those are all based on tariffs. And then, you know, after the Fed meeting, Trump basically tweeted on Truth Social or whatever, like the Fed really should have cut rates or something like that. It's like, you could just totally tell that this guy is like doing what he can to force their hand to do. He's like, he's not going to get in an argument with him. He's going to like force the economy to slow down in some way, shape, or form. And he didn't get what he wanted, and J Powell didn't give it to him. So like, yeah, I don't know how this settles out. And that's where I'm really cautious is like, if these tariffs do go into, you know, effect, then you do have an issue where demand probably comes down, growth slows down, companies stop spending as much. So I will definitely get more, probably, you know, I'll be a little bit more concerned with some of my holdings that I put back on, like Magnite, Snowflake, which I put back on recently. We could talk about that later, but yeah, So I think I agree. Like, we just sold off 10%. We deserve at least a bounce. And if it turns out these tariff things are BS, then, you know, this whole sell-off, a lot of it for a lot of these great companies were driven by the expected slowdown that the calculus people are doing based on if tariffs go into effect and how that's going to affect demand. So I think we could have potentially overshot to the downside if that's the case.
I mean, there's something that I have to say in the midst of all this is that, in my opinion, the market hates uncertainty, right? And once you finally get the news, the worst news, in fact, like, for example, July 2023, the Fed had its last rate cut. Looking back from lagging terms of assuming the stock market has a lagging effect in terms of reacting to past events and past data, that should have been the bottom, right? But the market doesn't do that. It's very forward looking, but most importantly, it prices in certainty just as much as it prices in uncertainty. So the longer we're in price discovery mode when uncertainty comes to the market, the less uncertainty it actually gets, because the market is constantly in price discovery mode. Someone was saying this earlier, but when you really think about it, whenever news hits the market has to readjust itself to the valuation that it assumes with all the news that's out. And the latest news we got, I would even argue that the only news we really got from yesterday was that the Fed is going to start tapering quantitative tightening. Besides that, like, we already knew the GDP forecast was like somewhere around 1%. In fact, people thought it was going to be worse than that. We already knew that inflation is going to be a little bit sticky. We already knew that. And we already knew that unemployment might tick up a little bit. And that's to do with the Doge effect of the public sector taking most of the unemployment, keeping it tight. But other than that, like, was there really anything new this week? So that's why I think unless we get some significantly bad news or more uncertainty into the market,
it's priced in.
I find it hard to make lower lows, like, unless like something happens that's just everyone's unsure about. Because that is it right now. The market is okay with the tariffs right now because they know what's going to happen. They know how much it's going to be. So if you ask me, are you waiting until April 2nd to actually buy into the market to get that certainty? My thing is, if you're waiting for information to act on it in terms of new information that we already know, then the market's going to be ahead of you. Because otherwise, everyone go along in July 2023 because that's when the last rate hike happened. No, the market bottomed in October 2022 when one of the highest inflation prints happened. So that's what you got to kind of think. Now, I think that if inflation surprises to the upside, or unemployment surprises to the major upside, because I think unemployment is already speculated to be going higher, right? Inflation speculated to be sticky. If it surprises to the upside, then okay, well, more uncertainty in the market, how much higher is this going to go? But if we're like Goldilocks, dude, the market's just going to slowly rally after that.
Yeah, I think what one thing people like traders will say, and I keep seeing this quote being thrown around lately, but it's like, you don't need to catch the last 1/8 or the first 1/8 of the market, and you can catch the meat of the move. So I think a lot of people who have their trading hats on they don't want to be the first one to buy. And I think that totally makes sense, and that's fine. But I see a lot of value that I like in the market. And guess what? If we end up getting rug pulled, I'm going to be the kind of person where it's like, yeah, I'm doing a little bit of bottom fishing here, but I'm willing to sell these stocks at a small loss and get out if I feel that things are going to get really bad from here. So you can always get defensive too, but I like the prices that I'm buying at, assuming that there's no further downside. I do want to switch to probably individual stocks, but Shai, wanted to get you in the convo. How are you feeling?
Yeah, I mean, we were talking yesterday. I was somehow the Grinch of the group. I was like, I'm not bulled up.
You're the
guys.
Grinch.
Like,
You're the Grinch.
I am the Grinch. I was the little grumpy Grinch. I haven't made one move this week, not one trade. My long-term portfolio, I've been hedging, doing some downside puts when I see things are a little intraday highs. Like, like the Fed, like, I heard Powell speak, but really, did the narrative change? I don't think so. Like, we still have a deaccelerating economy layered with consistent pricing pressures, and there is somewhat of a looming potential that unemployment might be going up, and we're in a tariff war that has no end in sight. Like, we have April 2nd. That's a ticking time bomb for the next 2 weeks. But I agree with what you guys are saying, where the market pulled back 13%, or QQQ pulled back 13%, 14%. Tariffs being priced in the market already. Like, this is not an inflation-driven pullback. This is a tariff-driven pullback. What Sam was referencing, market hates uncertainty. Guess what potential tariffs cause? A ton of freaking noise, a ton. And you saw that with the last earnings cycle. All across the board, near-term guidances were weak because everyone was trying to be conservative because they don't know the implications of the retaliation from the tariffs, how long it's going to last. Like, it's a very noisy environment, and I think we got nothing yesterday or 2 days ago. I don't even remember, this week from the Fed. Like, it was just nice to see QTing is like bye-bye, but really, did anything change? Not really. So when I saw the market catch a big bid off that, let's call it dovish. It was a dovish Fed. I'm like, okay, that means a lot of negativity is priced in. Maybe there's some zero DTE coverage because it wasn't today an expiration, like a major expiration as well in the option.
Operating expiration.
That's tomorrow.
It's quote unquote
Tomorrow.
quad witching. Yeah.
So I think maybe there's some covering there. Like maybe there's some wonkiness that was occurring on the quad witching.
Oh, yeah.
Either way, nothing changed for me. And in this pullback, it was driven by tariffs. So the trend is going to continue, whatever the trend was. And guess what? The trend was to the downside. And I think today, even yesterday as well, like 200-day EMA on the SPY, that has been a clear rejection 3 straight times now. And 3 times have touched that. We have not closed above it. We've actually pulled back. That's telling me like maybe we don't have another leg down, but I don't think we have a V-shaped bounce. I really don't. I think there's an anchor. There's somewhat of an anchor towards any kind of bounce we have. I think the bond market's telling us something different. I think there's too much uncertainty and noise that's not going to be driven by the Fed saying something like 2 interest rate cuts when the market's priced in 3. Like there's just so much uncertainty, and until we're above the 200-day EMA levels, like I'm being defensive. Like I have no incentive or urgency to add, and we're also in this awkward middle ground where things aren't that attractive right now. There aren't. Like me in Logical's world, I think it is. I think small caps got destroyed, but in the Sam and I world, where valuation is somewhat of a tool, but it's not the end all be all. The high quality names, like, are they that enticing that we want to add?
CrowdStrike bottomed last week. A lot of good companies bottomed last week. Amazon was 189 earlier this week.
But that whole market bottomed last week at this point.
But yeah, I know. So that's the thing. That's why it's justified. Like last week was my time to buy. This week, I did a little bit of trading, but besides that, that's really it.
I think CrowdStrike under 300 is maybe enticing, but really under 270, that's when like, whoa. Pounds here in the 60s, whoa. Axon at 460. Axon never made it to 460, like that 200-day. Never touched it. So like, I think you have to be very, like, again, I'm talking high moat defensible stocks that everyone wants. I'm part of. So like these names just didn't give us that buying dip. The names that did give us a buying dip, they deserve to be down here to look attractive. Like Trade Desk, I'm underwriting that was not thesis cracking, internal F up, that they're going to reverse courses if the recession doesn't occur. That's what my bet is, but I'm not going to be buying aggressively here because I'm putting a faith in something that I have to see Jeff actually prove it to me that the eternal F up isn't just a couple months. And it isn't just a year. Yeah.
I'm sorry, but on the topic, we keep talking about ad tech. I'm still going to go with Magnite, and I am back in full position, and I'm like bigger than full position. I actually have the largest.
That was not my layup for you from Magnite. We are not talking Magnite this episode. We're moving on to outside of ad tech.
It's so funny. Like you're every single time. Like I think if you think of all of us as like of all the daily moving averages, like Shy is probably the 100-day moving average. I'm the 200-day because I'm just generally bullish all the time. And you're like the 50-day, right? No, the 3-day moving average. Because now you're super bullish.
No, he's a 9 EMA on the 5-minute chart.
No, definitely. I mean, dude, it's just tough. It's like, okay, for instance, no, I'm sorry, but I'll make one last comment. Like, you talk about you don't want to buy the Trade Desk here because it had a company-specific issue. I totally get that. I don't want to touch anything that has a company-specific issue. Magnite did not have a company-specific issue. If anything, they have an insane year ahead, barring we don't have a recession, and that will kill the entire.
Well, we talk about this. The open path narrative is always going to be there. So like that's like until
That's been there for years, and that hasn't stopped the stock going up 3x in the last year and a half. It went from 7 in 2023 to 21 a month ago.
I will say I don't love that comparison because 23 was way oversold. I want to see from here. Like I think this is like,
but it's 12 now. I guess
12. No, you're right. You're right. Magnite does seem undervalued
you said it was undervalued
as a good
at
rental.
19. You said it was undervalued at 19. It's at 12 now, and
it's always going to be undervalued though.
Sure, but at 19 you said it was undervalued. What is it? I mean, you said it was 50% undervalued at 19, 20. Now it's at 12, so is it 200% undervalued now? Like, because if 30 was the real
here's
amount,
the thing,
right?
It could be undervalued at $6. Like that's the thing. Like there's no level. It's always gonna be undervalued. Like I was talking to someone about a certain stock, Micron. Micron will always be undervalued.
Yeah,
Doesn't
that's
matter.
fair. No, you're right. No,
Extremely
I get
cyclical,
that.
though.
But man, like even if we got back
So
to
is Magnite. You said it's extremely cyclical. So is Magnite.
yeah,
No,
so is Magnite.
but Micron is like super cyclical, dude.
Super cyclical, and that's a commodity. I don't think ad tech's a commodity.
Yeah,
Right.
yeah, no, it's
So
not.
is like the Trade Desk. So is AppLovin. Sorry to say it. So is Magnite. I'm not silly to this fact. Like
No,
it
no.
is. If we do have a real economic slowdown, these stocks are toast.
Well,
Like,
okay, so
straight up.
let's change industries though.
Mm-hmm.
You guys, I think you guys are both bullish on space because we all own ASTS, right?
Fair enough. Yeah.
No, I don't understand.
You don't? I thought you did.
Oh,
No, I
he
told
got
you
out.
that was a trade for me
Deeper
last
hands.
time. I told you that.
Oh,
I told
okay.
you that. No,
So-
that was never a long-term thing. Rock
You're
Lab
a
is more of
long-term.
long-term
Okay,
thing.
so you're a long-term investor. Why don't you want the space economy exposure in your portfolio?
No, I do. I have some Rocket Lab, but I bought it like
Okay,
the worst time ever.
So what level? So during this dip that we have, it's down like what 50% in this.
I
Like,
no,
market
it's simply
correction?
because I didn't look into it. Like there are way too many things that to look into.
What's making
Yeah.
you not added right now though?
I mean,
ASTS
one.
or-
Which one?
No, Rocket Lab.
Oh, right now? I mean, I got a decent size. Well, not decent, but like for a speculative company, because for me it is speculative because they're not profitable at all, and I'm not specialized in that area, so I don't know too much about it. It was probably just like to cure the itch. But if anything, though, I think when it comes to the potential against having a logistic space launching platform, that would probably be Rocket Lab, other than buying SpaceX, which is obviously private. When you buy Astra Mobile, like you're buying the infrastructure when it comes to the networking traffic being propagated through outer space, right, with satellites. So they're not necessarily the space launch platform with that. They're just like kind of partnering, going to kind of get the benefit for it. And to be honest, like I wouldn't be surprised if that company gets acquired at some point by T-Mobile or something. Like, let's be honest. But no one's going to come out and acquire Rocket Lab. Or even if they did, Peter Beck's not going to allow it. I don't think he's going to allow
I
it.
don't know if ASTS will get acquired, but I don't think T-Mobile can afford. Yeah.
Well, okay, but at the same time,
T-Mobile-
I don't feel like they're going to be able to compete if one of the companies decides to disrupt them.
I mean,
they
isn't
don't have a
T-Mobile-
defensible moat.
Isn't T-Mobile partnered with SpaceX though? It's really going to be AT&T or Verizon, but they would never get acquired because they're going to.
Oh, actually, it was AT&T
but-
that did
was
partner with
it-
them. My bad.
Yeah, I think T-Mobile's going the Apple route a bit, which is again so limited to what ASTS offers. But it's going off of Rocket Lab. I'm having this issue as well where I don't want to add to I already doubled my TTD position last week. I'm not adding any more until I see the next earnings. Doesn't matter if it's $45 under 50. Like I'm not adding any more. Rocket Lab, I built a substantial position at $4, sold half. And I added 100 shares at 1670 during that earnings dip. But like, I love Rocket Lab. I think eventually we're gonna get some more government funding for the space economy because cough, First Buddy, he has two massive companies in space, Starlink and SpaceX. It seems like Trump is somewhat limited to
First
help the
Buddy.
acceleration of EV. I think he's gonna maybe do something else in the space industry. So like I think there's gonna be more government flow for space, and when that happens, there's only so many names that will catch a bid. Really? What's so funny, Sam?
Dude, that's a funny term. I've never thought about that. First Buddy.
You never heard that before?
No, I've never heard of that before. Did you make
my
that
God.
up?
I'll take credit for that. On live on March 20th, 2025.
First Buddy. All right, sorry. Go ahead.
No, but I think there's going to be like there's a government angle in the space economy that's not really factored in that much right now. And I think there's a defense component of it. I don't think ASTS will get too much of it. I think really Rocket Lab as a FedEx, the space logistics company in the future, they're going to be partnering up a lot with the governments. And we haven't seen anything like we saw Stargate Initiative. Like I'm surprised we're not seeing too much quantum initiative, space initiative. Like, are you guys surprised on like the lack of big projects his first 100 days?
Can I?
Wait.
I think just the problem with Rocket Lab 2 though right now is like they had their earnings and they said that we're gonna delay the Neutron launch, right?
That's so normal though in the space stocks.
sure.
That's totally normal.
Actually though, ASTS said they're going to be speeding up deliveries.
Different businesses.
Sure,
yeah.
but like it's normal and then it's not normal, so I don't know. I'm
Well,
just saying.
Neutron, they're making. All right, what was the thing? How much money did they make last quarter? Was it 120 mil? Rocket Lab or 130? It was
in
around there.
Revenue, they did 130 mil.
One Neutron launch is 50 mil. It's a game changer. So like I think on any kind of new product like Neutron, Rock Lab can't. It's an image problem. It cannot f that first launch up. They have to make sure it's not 99%. It has to be 99.999% confident. I think they delayed it. What, they went from middle of second half this year to second half this year. Like, nobody really knows if that's 6 weeks, 2 months, 3 months. But either way, like, they're landing major deals. Like, and they also made a big acquisition. Like, that's why I want to see, like, in a first mover like Rock Lab, I could care less about profitability. Like, I know that's justification on a spec position, but for me, in a $2 trillion economy that's just getting started, not $2 trillion yet, it's going to be in 15 years. Market share, go for the market share, all market share, and they have the first mover advantage. I feel like they could be profitable if they wanted to be honest. I really do, if they weren't just reinvesting so aggressively into gaining that market share, expanding their moat, becoming the full-end space prime. Like, I think they're doing everything I need them to. But wasn't there also a short report that came out on them 2 weeks ago?
I didn't pay attention.
I'm not sure. I didn't
see that. But I mean, yeah, dude. I mean, look, it's a $10 billion company,
which is crazy. I love. It's crazy. It's $10 billion now. That's awesome. I mean, it's almost mid cap.
I mean, that's the thing though. They're doing like what, 500-600 mil in revenue, and
well,
that's
this is the reason why I'm
30%
not
gross margin.
Yeah. This is the reason why I'm not buying right now.
But here's what I'll say: like, ASTS is not a company I would typically own. I don't typically own things that have no revenue. But when you have Verizon has a large stake, Google has a large stake, American Tower has a large stake, AT&T, Vodafone, and then they have big partnerships with all these people. That means that there's a lot of, there's a lot at stake here to get that going, and they're ahead of their schedules on launches. They want to speed those things up. They have $1 billion in cash to really get that down, and if they're able to do their launch schedule, they're going to be doing $1 billion in free cash flow in the next 2-3 years. 3 years, something like that. But so it's like if it's trading at $7 billion market cap and they can do, there's a path to set, $1 billion in free cash flow in 3 years. I mean, this thing is very cheap. It's like ridiculously cheap.
Well, I also think that Rock Lab and ASTS gets paired up with each other all the time. So I think there's one, access to space is part of the equation. I think the next frontier of space, access to space, is Rock Lab, space logistics. The next frontier is connectivity. And that's essentially what ASTS is doing. I think a lot of people get confused about what they actually do, but they're bridging connectivity. That's essentially what it is. Terrestrial, space-based telecommunications divide, like, they're solving that issue. And I do think in the traditional satellite internet models that are in place right now, they rely on very, very expensive ground-based infrastructure that ASTS is kind of disrupting with their constellation, where they're designing to connect directly to the mobile phones, bypassing the need for the specialized receivers. And I think that's a game that's literally, you think that it's like, oh, it's only a simple evolution. No, it's an actual game changer on global communication. Like, it is going to change everything. Underserved areas are going to finally have access. The remote or underserved regions will finally have access. Cough, cough, Africa. And I think the partnerships with AT&T, Vodafone. Okay. There's a couple.
Can I say something? So,
go for it.
Okay. Actually, I don't even need to ask if. Are you an iPhone user or an Android user?
iPhone.
Very quick answer, right? So, are you a T-Mobile user or an AT&T user?
AT&T.
Whatever is
That's
on my
probably
phone.
not the answer I expected. But when you compare like the better of the two in terms of carrier services, which one has the most market?
Probably AT&T.
Really? I would think T-Mobile is like the one that actually has grown very fast lately. In fact,
They've grown very fast, but I think AT&T has a first mover advantage, though, probably
Also
from a
by
bigger market share.
acquisition,
maybe,
too.
but
Didn't they buy Sprint a while ago?
well, when you think about it, okay, who is probably going to be the leader in terms of connectivity from a satellite or space perspective?
If you're trying to say SpaceX, then I get your point. But honestly, I've been seeing a lot of tests where the SpaceX signal has not been really good. Like, it has not been getting through, and it's just been SMS. Whereas, ASTS's tech is trying to actually be able to take phone calls in rural regions where SpaceX is struggling to get text going.
Well, I think that's going to be like the question, right?
Right.
So, I mean, obviously ASTS is going to be relevant probably in the future. But if you want to invest in the leader, I think that question well, it sounds like it can't really be answered right now, right? Like, because you never know what Elon's going to release in terms of SpaceX or in terms of Starlink. And on top of that, they're also partnered with T-Mobile. Now, I'm not trying to knock on ASTS or anything.
No.
Clearly, I'm not like, I have not done my research in this, which is the reason why I don't constitute having a position in ASTS right now other than a trade. But if I were to do research, I would have to do research of both these companies and see which one I think will be set up for the most success. Unfortunately, you can only invest in ASTS as a retail investor.
Sam, let me talk to you about the differences here.
Go,
Maybe
yeah,
I
do
can
it.
persuade you live. So again, this is
Yes.
the constant. This is the constant comparison. This is why I always get ASTS Starlink. Like, how is anyone going to compete against Elon? Is this Rivian versus Tesla? Like, there's no fair battle. ASTS really is still in a really strong position, and it's because their approach towards solving the connectivity is like fundamentally different than what Starlink is doing. Starlink's direct-to-cell service, for example, is in the infancy age. Like, it's so early stages, and it's limited to, like what Logical was saying, it's text only. Voice and data, I think, is supposed to be expected later. That's a massive difference in the network design by itself, where Starlink relies on a large number of satellites to create that coverage, where ASTS is structured to deliver that broadband from fewer and larger satellites that connect directly to the 4G and 5G phones. And there's no extra hardware or software needed. And that is a major distinction where the others kind of need that extra hardware software needed. It's the scalability approach for what ASTS has. If they can solve it, which it seems like they are with all these partnerships, it's a game changer. And I think that's why it's really important to know that they're building a system that integrates directly with the carrier networks through these partnerships. And once it does scale, which I hope it does, that's why you're seeing these estimates in a couple of years like be eye-opening, it's going to extend traditional cellular service into areas that like were never underutilized, and it's going to cause globalization. Like, that's what we want. Like, we want globalization in the world, and everyone wants the highest growing CAGR region, which is Africa. The issue is that it just doesn't have the technological capabilities of everyone else. Maybe this will change it, but either way, everyone else is kind of doing the same. It's honestly just like autonomy. What Waymo's doing versus what Tesla's doing, that difference, like, it looks like Waymo is like years and years ahead. It might be, but the way Tesla's approaching autonomy, that's the scalable version for large scale. ASTS is kind of doing the same thing where they're thinking bigger. They're thinking, what's the greatest scalability? It's not extra hardware, extra software. It's directly to the phones. Where Starlink really is just, it's the low-hanging fruit of it, and it's just very different. But I could be wrong. I could be really wrong.
I mean, it's too early to tell, in my opinion. I think, like, to know who's going to be, but generally, when you do know who the leader is going to be, it's going to already be priced in. You might be buying at much higher prices. So I'll give you that. At the same time, like, it's without a doubt that this entire space industry is going to be a booming sector. I mean, there's even Project Kuiper as well. I mean, that's focused more on internet connectivity, but that's their goal. Or I don't know if you guys know, but Project Kuiper is Jeff Bezos's initiative to provide connectivity to areas where internet connectivity is not available. But I think he's focusing more in Latin America right now. At the same time, though, it is an addressable market that isn't necessarily addressed right now. So there is a lot of TAM there. The only question I have is, are we too early to even think about this? And this is probably the same argument I would attribute to quantum computing. Quantum computing seemed like a great idea at the time, and it was definitely getting a lot of price into the market in terms of how big it was going to be. But then once DeepSeek came out, people started to think, like, do we need that type of speed of compute, or is it more about the network throughput? So, I mean, I'm not saying that it's not going to succeed. All I'm saying is that that I don't need to be in a rush to buy into these companies, given that other companies that I know are already leaders are trading at a discount right now. I mean, there are some speculative positions that I do put on, but when I think of ASTS, do you consider that a speculative position?
Totally.
Yeah.
They're worth $5 billion. They made $4 million last year.
Oh, okay. That's definitely speculative.
It's supposed to be like $2 billion in 2 years through these partnerships, and they can actually solve and scale. That's why it's like it's legit 0 to 100.
Look,
but
I typically would not buy a stock like this. What I will say is the retail community on this one are absolute chads. Like, there's nothing. I have not seen anything like this. These guys are really good. They host like weekly spaces. and they only talk ASTS. They've been long since $2. They've understood the tech. I mean, they've ripped apart every single bear thesis with actual facts and evidence. There's a few guys on Twitter like Tut Capital, Anpan Man, the Kook Report. These guys are like beasts, dude. So like, I can just almost rely, like I almost have so much conviction in them. Their conviction is insane to me. Like the space mob is nuts. I think it's one of like the craziest retail crowds. Like, and obviously there's like a lot of like retail noise and whatnot in that, but the guys who are like kind of at the head of that are really smart dudes. I've listened to them a lot, and yeah, I mean, I would say
Well, you're talking to one.
Yeah, I just think that when it comes to the company that's better positioned for government support, it's probably Rocket Lab.
Yeah, I'm not looking for government support though.
Yeah. Well, I mean, but
I'm just
that's
looking for free cash flow.
once you have ties with the government, your moat becomes a bit more defensible unless someone else comes in and takes that contract for you. Because
But
like
the contracts that they have with like AT&T to compete with T-Mobile, who now is working with SpaceX, it's like, I mean, I don't know. I'm just saying, like, you have a situation where, again, American Tower, Google, Vodafone, Verizon, AT&T, all of these companies have a stake in it because they know that if that ends up being the real thing, then they're going to be left behind if they don't have some sort of investment in it. So it's at least a vote of confidence. Like, they're probably smarter than I am, and they really see something in it to be investing hundreds of millions of dollars in it without even seeing a return.
There's definitely something of substance when we talk about ASTS from someone who has not done their due diligence on it. But I would like to take the time to do it. The only problem is that I got to get ready for that next leg down if it happens to buy more companies that I want to buy. Because if we have another leg down, I'm not going to be like, let me buy some ASTS. Because if ASTS, go ahead.
Can I tell you though? It's up 14% year to date. I mean, that is crushing the SPY.
Yeah,
like,
no, that's
it is a
outperforming
leader this
sure.
year. So like, I mean, just wanted to say that.
Yeah, no, I mean for sure. Like, there's something to be said, especially with stock talk about the mid cap defense companies. You know, there's something to be said about the rotation into something that's more defensive when it comes to industrial services. But at the same time, they are pricing in a lot of the future today. And that's the reason why I haven't bought more Rocket Lab, is because I'm not saying I want to wait till Rocket Lab comes down. I'm just right now, there's probably other things I want to put more money to work on.
I don't think Rocket Lab's going to do $1 billion in free cash flow in like 2-3 years though, which is what ASTS could be doing, which is so that this is trading at 7 times. If you were a stock that was making money, like, it's 0 to 100 though. I understand 0 to 1. I understand that, but I'm just saying, like, imagine you had a stock today. Obviously, the risk is why you're getting the discount, but like, imagine you had a stock today that was trading at 6 or 7 times, 2027 free cash flow. You'd be like, oh my goodness, that's so cheap, right? And so that's the concept. But anyways, we talked a lot about this, so I don't know. Do you guys want to keep going, or you want to pivot, or how you feeling?
No, we can go ahead. You probably got something you got to say right now, right?
Yeah, let's do that before we jump into some of the big winners in the market lately that have been helping my portfolio. But before we do that, we want to give a shout out to our sponsor, ValueSense. The landscape of investment research is undergoing a massive shift. Sentiment tracking, automated valuation models, and real-time fundamental analysis are no longer the domain of hedge funds alone. ValueSense is breaking down these walls, ensuring that sophisticated data-driven strategies are no longer monopolized by the financial elite. If you are interested in getting a leg up on the competition, check out ValueSense at valuesense.io. All right, so
getting those type of platforms in, being able to figure out the fundamental stuff in the background.
Absolutely, I think that's another thing. Before I jump into this, like, the reason why I'm actually 110% long right now, which is crazy, but it's because I am getting to a point where I'm consolidating my portfolio to names that I can appreciate the fundamentals of. Because let me tell you, if you don't have conviction in what you own right now, and I know I've told you guys conviction is overrated, but I will say when there's volatility in the market, that's not true. Like, if you want to hold on to a long position, you do need to have conviction. Like, because if the jitters are getting you out of it every single time it goes up and down, that means you do not have the conviction. So you need to go do more work. And that's how you bleed through multiple paper clips. What's the word I'm looking for? I forgot the word, but what's the word I'm looking for? When you paper cuts, paper clips. I'm sorry. Yeah, so I think what an issue is, like, when you have volatility, you want to be able to hold through with conviction, and the only way I can do that is with fundamentals and valuation and feeling confident in what I'm buying. So yeah, having like these platforms that help you look into specific valuations and over time, etc. Like that's why I feel comfortable buying Magnite and I've gone overweight it. But real quick, a few really strong spots in the portfolio. I've been banging the drum. You know, you guys know I was like really bullish, not really bullish, but like I felt like China was a very good trade earlier in the year, and I felt like there was value there, whereas there was less value in the U.S. markets. I said it on this podcast. So I'm out of the China trade now. I think it's gone from contrarian to consensus at this point. So I think the valuation gap has definitely closed in terms of Q's down 15%, KWeb up 35%. That's a 50% gap that was just closed, right? So I think that the easy money was made there. So I'm out of that, but I'm always looking for value in the market and where that's going to be. So if I feel that the risks to the market are a slowing economy and a weaker consumer, then I want to distance myself from that consumer, which is why half of my portfolio now is in biotechs and healthcare, which is what I've been beating the drum on for many weeks now. And dude, ARQT, which we talked about on this podcast a lot, Arcutis, is up 25% in the last month. I mean, absolute banger. And dude, that's supported by very good growth. They're just, in every way, shape, or form, they're expanding their TAM, they're executing, they're about to be profitable. Everything's making sense. There was like acquisition rumors and whatnot. I know it got some upgrades recently, which is why the stock popped. But man, the chart looks so good. So ARQT has been a really strong spot in the portfolio. Today I had a report in my portfolio on ARS Pharmaceuticals, ticker SPRY, SPRY. Dude, that thing was up like 24% today. Today, when the market is just getting killed. And dude, their sales are not even there yet, but their plan is in place. The management team is basically the management team that took Narcan to a 95% market share position. And dude, they are, clearly firing on all cylinders. The stock had 37% short interest. Didn't make any sense. The positioning was just so off. So when we talk about like China was a good trade earlier on this year, and the reason why I left that trade is because it went from under-owned to almost like over-owned. And I feel like biotech and healthcare is still very much under-owned. And if we do see rates come down, then I think we're going to see a lot more activity in that sector. There's going to be inorganic growth opportunities like M&A because, these cash-rich biopharmas are not going to be able to sit and collect 4% on T-bills, 5% on T-bills anymore. So they're going to have to reinvest that money they have in the bank. And I think it makes sense from a kind of value tilt in my investing style to look for companies that are growing early in their inflection cycle. Like we talk about growth companies. We want to be invested in, like I like small caps, but we definitely want to be invested in growth companies. And these companies are so early on in their growth and they're in a very interesting spot because one, they're self-funded, they have cash on the balance sheet, they're going to make it to profitability. And so that de-risks a lot of it. They don't need FDA approval. You're investing in these biotechs, but really after they get FDA approval, they're kind of transition over to being healthcare stocks at this point. So I don't see as much risk in, these essentially biotech turned into commercially approved products. You're just studying a business with a product and it happens not to be overly exposed to a weakening consumer because if you need medicine, you're going to buy it. So yeah, Spray was a very good stock today on earnings. ARQT, very good stock on earnings. Earlier this week, we also had RGNX Bio, RGNX. I've talked about that one on this pod before, I think, where I said, dude, this stock is trading at like $7, $6. It even got under $6. And by the end of H1, they're going to have $14 of cash per share on the balance sheet. It's just crazy. This thing is trading at half the cash on the balance sheet. And they have 3 phase 3 trials coming up. And one of them is partnered with AbbVie. Another one is partnered with another major company. They're getting milestone payments along the way. They're going to get, royalties or they have like a 50% split on the royal, basically sales down the road. There's just a lot going on here. Their main competitor, which has like a huge valuation gap that's on the market right now, it's SRPT, Sarepta. They just had a safety event, which is obviously very unfortunate. But now people are going to start looking at other places in this market. And, RGNX has a competing product that might be getting into, approval state. And again, I don't size these pure bio names that are in clinical trials bigger than 1 or 2%. But dude, when you're trading at less than half the cash on the balance sheet, when you have 3 shots on goal with 3 different phase 3 trials that are really progressing with big partners, you don't really need much for this to work from here. So that's what I'm seeing is we're talking about value, we're talking about under-owned, we're talking about positioning being out of whack. Biotech is that because like SPRY coming into earnings today, 37% short interest. It's not like they blew it out the park. They had already pre-announced their revenue back at the JPM conference in January. It's up 23, 24% today because it's just overly shorted. There's positioning is very key in these markets. Anyways, I just want to talk about healthcare, biotech being a place of value still in this market. I'm seeing a lot of strength there. You got to pick the name still. It's still a stock picker's market. But yeah, I don't know. Any thoughts on that, Shai?
Yeah. Where's NVIDIA fit in that thesis?
NVIDIA partnered with SPRY, actually.
That was too long of a segment without including NVIDIA. No, I mean,
Yeah, seriously.
but listen, that's what's been showing strength today. Like my small cap portfolio, I'm looking at ARQT. I'm just gonna say ARQT, green, ClearPoint, green, Procept, green,
Yep.
Delcath, green.
SPY
Those were
red.
my only green. Everything else was red.
Q's red. Yep.
And so like
Market cap
there
heavy.
was strength there today, and I think it's because it's not. I don't know. It's not fixed. I mean, it's not recession proof, but like it's as close as it can be. Where science is going to do its thing, and it's going to continue. But I do want if Sam doesn't have anything to add to this, I do want to hear this. I'm hungry right now because I'm around my dinner time. So like, Sam, you have nothing else to say to add to this. I do want to hear
I could
some.
go for some Korean barbecue, actually.
Yeah, right. You want? I'm feeling some meat. I'm carnivoring right now. I want some.
Not for my stomach though, but for my ears. So, you got some Korean barbecue to spit at us, Logical?
Yeah, exactly. This is the stock I wanted to talk about last time, and I know I just gave a whole spiel about the risks of the economy being the consumer and the weakening consumer, but I'm gonna pitch a consumer stock anyway, so bear with me. This is a stock that I find to be very Peter Lynch style. First off, the ticker is GENK, or Gen Korean Barbecue. I always call it Gen. I've been calling it that for 10 years. I've actually been going to this restaurant for over 10 years. And so Korean barbecue is a really big culture in LA. I'm a big foodie. Look, I don't necessarily go to Gen anymore because the K-Town Korean barbecue scene is like super sophisticated and I've just elevated. But dude, for the first 10 years of eating Korean barbecue, I went there. I was very happy going there. It's all you can eat. It's not that expensive. It's actually a reasonable like night out. It's fun. I mean, I went there for like literally 10 years. So I think they're at an interesting spot. This is one of those companies that I can't believe it trades on public markets. This is a situation where it exists in my backyard and that's why I know about it before the rest of the world does. And they have about 40-ish, 43 now locations. They're planning to open another 10-ish this year. They've been doing pretty good at that. And they're aiming to get to 250 at some point. I don't know when that point is, but probably in the next like 10 years, I would say. I think what has kept investors away from this investment, and it's been kind of trading and choppy and kind of down, is because people are judging this stock on same-store sales, which is very common in the retail space, in the restaurant space, that if you have, trending down same-store sales, that doesn't look good. But if you really know this company, there's a couple things to really understand about it. Same-store sales might be down, but that's because inflation went up, their input costs went up, and they didn't really raise their prices. Now, you could say, oh, well, that's not good because they don't have pricing power. They're working on premium menus and trying to get like premium drinks and that kind of thing. And so I think that they will get there in terms of same-store sales growth. And actually, funny enough, this stock was getting shorted recently, and it was up 30% on the recent earnings because they said year to date, they actually are tracking for a same-store sales increase. So perhaps we're finally, maybe 2024 was a bad year, but 2025 is trending in the right direction. They have easier comps this year. But what's really interesting about this company is that they have 40% cash-on-cash returns when they open up a new location. So they're able to self-fund their growth. So this is a stock that's trading around like 200 mil market cap. They got 20 million of cash on the balance sheet, no debt. And they are basically able to self-fund all these new stores opening, and they're able to pay back those stores within like, I don't know, it's like 2-year payback period or something like that. So they're going to self-fund their growth to 250 restaurants. And I think the short-sighted thing that this market has wrong about this company is, oh, same-store sales are not that great. It's not growing. Yeah, but dude, their number of stores are growing every year, and they're able to pay that off without taking on any additional debt. So what's going to happen to this company in a few years? Right now, it trades at $200 million market cap, has $20 million in cash, and it's like they're doing over $200 million in sales. So I did some quick math, napkin math. If they're doing, with 43 restaurants, they're doing $208 million in sales. Once they get to 250 restaurants, they're going to do $1.2 billion in sales. And, who cares at that point if they're doing, same store sales being on flat year over year? Their overall sales are going to be growing. So you're paying, $200 million market cap for this company that's going to end up 6xing its revenue overnight, not overnight, but over time. And the restaurant level adjusted EBITDA margins are 17, 18%. So once this company stops trying to constantly grow their store count, what's going to happen? They're going to scale back all those costs that they're doing, and they're going to be sitting at an 18% adjusted EBITDA margin, assuming they don't expand those margins with premium menus and grow the revenue per store, et cetera, et cetera. But 18% adjusted EBITDA margins would basically get you to like $218 million in adjusted EBITDA. So let's say it takes them freaking 10 years to get to 250 stores, right? Let's just say. Then, and maybe it's longer, whatever it is. Could be longer, could be shorter. But the idea is, I'm just being directional in the math here. If they got to 250 restaurants, they're doing 1.2 billion in revenue. They're going to be doing $220 million in adjusted EBITDA. This means that this trades at like less than 1 times EBITDA for whenever that future is of when they get there. So like let's say it's in 10 years. This thing is trading at like 1 times adjusted EBITDA for 10 years. Then you slap on a 10 times multiple at that point, 15 times multiple. What's fair for a cash cow that can constantly pay back those profits to shareholders in the form of dividends or whatever, buybacks, etc. So this could be a huge growth story long term. And right now it's just being priced at like it has no future. And I think that's what the market is missing, is that this thing is going to be a cash cow someday, and they're reinvesting into their growth today. And people are so short-sighted on like that flat, same store sales growth. I think that if this thing actually does turn into a same store sales growth story, I think multiple expansion will be very quick here. But yeah, it's a story that's going to require patience. So obviously, I'm talking my book a little bit, and I'm talking about longer term. But I've seen this company. I've sat in the restaurants. I've eaten there a bunch of times. I know friends that go there. When I go to the one in my city, there's always a line out the door. Like weekends is packed, and so I know that if like Texas, they've been opening up a bunch of locations. And by the way, a lot of locations are going to be more profitable outside of California. I know that people in other states are missing Korean barbecue. I know this is so stupid because it's like so far off from our tech and blah, blah, blah. But dude, I know this stuff. Like I know food. And I know that somebody who hasn't had Korean barbecue before is going to, these are going to be very successful. I think it deserves to be in any major city in my view. And they are actually getting there right now. So I know it will be successful, and it will just be a wait and see story until they get that store count up. And it's going to be a cash cow someday. So we'll come back to this episode one day, and it'll be like, damn, this guy pitched it. And, I've seen concepts like this before, but for once, I actually feel like I have an edge in it because I'm here. I know this story for 10 years, and it went and became a public company. So it's an interesting one.
Yeah, Korean barbecue is no joke, dude. Even if you're in a recession, like that's not a commodity. That's a staple, man. Like you're going out there, you're buying milk and eggs, and you're picking yourself up some Korean barbecue. Like that is a staple for everyone. In my opinion, I like Korean barbecue. But we definitely got to talk about GTC, okay? Because we haven't spoken about NVIDIA. That was a big event on Tuesday. More of like a sell the rumors. That was more of buy the rumors, sell the news sort of thing. But we saw a major recovery on NVIDIA on Wednesday. So what do you think about the new product line? Obviously, they're going to release a new iPhone every single year. A new chip every single year. But in my opinion, I think that this might be a little bit blip in the radar when it comes to compute. However, I think the demand might be more on the networking side. But NVIDIA does have the NVLink, which is their networking card that connects all the GPUs together. I think NVIDIA will always be the leader. But what do you think, Shai?
No, listen, they're not a hardware company, and I think that GTC event highlighted they're a full AI tech stack. Like they're going to own the whole end to end. And they will be riding whatever wave AI is going to have. They're not going to be left behind in stage one. They are AI.
Yeah.
NVIDIA is AI. So I think as computational workloads explode in the agentic AI world, they're positioned perfectly to capitalize on that. Maybe their margins in their hardware side of the business goes mid 60% in a couple of years. Fine. They're going to make up more than enough for that on the CUDA side. It's a CUDA-driven ecosystem. That's really what it is. Like if you invest in NVIDIA, no, you're buying it for CUDA. Their pricey ecosystem is because of CUDA. It's nothing else. And that's going to allow them to participate in quantum. It's going to allow them to participate in robotics. The virtual environment that CUDA offers is unmatched. And they're going to capitalize the most on it. So I think now I think AI is just in a digestion period. It really is. And I think the narrative of has CapEx plateaued is going to be a persistent one. And it might be there for a while. But either way, like look at the past couple of years. Like maybe it needs to digest a bit. Maybe it needs, I don't know the allocation weight towards the total revenue for NVIDIA. How much is hardware? How much is CUDA? How much is NVD Link? Like, I actually don't know if they split that out. Do you know that,
No,
Sam?
they don't. They just split out data center.
I think it would benefit them a lot if they started doing that. Because I think once you track how important CUDA, maybe it's too difficult for them because it's so intertwined in their ecosystem offering.
There's the packages they offer and everything yet.
Yeah, it's too difficult. But either way, don't look at the share price. You guys, as NVIDIA shareholders, you're doing just fine. There's a reason that AI met permanence for NVIDIA, and it's going to be here for a long, long time. But either way, we are at the top of the hour. What a fun episode. This is the Steve Nash of episodes number 10. We made it, guys. To my third grade middle school, third grade English teacher.
Third grade.
To my third grade English teacher who told me I couldn't do 10 episodes of a podcast. Here's for you.
Here's to you.
Here's to you.
Here's to you, third grade.
No, first 10 is awesome, guys. I cannot wait for the next 10.
Next 100.
To be honest, next 100, next 1,000.
Whoa.
Any final words, gents?
Man, earnings season's just going to pick up. It's like right around the corner, guys. Is that crazy? Because I feel like we just ended earnings season, and it's literally going to start in a couple of weeks. Yeah, well, I mean, we can go over the earnings stuff the following week because there's really nothing spectacular next week. But yeah, no, I mean, let's see what happens next week for sure.
Yep, that's all. Thanks for listening.
All right, talk to you guys later.